Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what I think is likely to happen next. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video, and we'll do is kick things off with the 1 hour time frame. So here we have Bitcoin paired up with USDT on the 1 hour time frame. Binance is our data source, and you can see here that we saw a bit of a move to the upside. It's actually got us a new local high. Okay, so we had this local high over this side, and we've recently breached this one. Now we are still below 37,980. Okay, so that is the white line that you see at the top here. That's going to be our breakout line. Okay, so we're going to break out of our structure if we cross higher than this level. Okay, so that's going to be the first thing that we're going to be looking for. Again, that would be another local high. Now, as you can see, the white line is the 50 EMA, the red line is the white line is the 200 EMA, the red line is the 50 EMA, and the yellow line is the 50 SMA. You can see here that there's a potential death cross on the hourly with the 50 SMA crossing lower than the 200 EMA. It hasn't happened yet. We might actually see this get avoided if we can have an upturn here, but again, we'll just have to see if we can avoid that one or not. Our ultimate structure here is quite interesting. If you follow the EMAs and the SMAs, we actually had a breakout structure yesterday at about 6 p.m. UTC, where we broke above the 250 and the 200 EMA, the 50 EMA, and the 50 SMA, closed above all of those, and we soared up a little bit higher. Right, so right now the price action is above all of those EMAs, and it's looking pretty good. We are, of course, still in a bullish structure from Smart Money Concepts after we did have a false flag on the bearish one. However, it has not yet been confirmed. Now, if you're following the videos that I did yesterday, then you'll know that we've got a really complex ranging market. It's basically just trading sideways between two key levels. Right, so we have that upper area around 37,980. We might as well call it 38,000. And we have the lower area where we're finding basically 35,100. We'll call it 100. 35,000. We'll call it flat 35 and a flat 38, right? So we're basically just ranging between these areas. And there's lots of liquidity grabbing occurring. We see lots of liquidations. I think at the last 24 hours at the point of recording this video, we have $30 million in Bitcoin liquidations. So nothing terribly too crazy. It's just a ranging market. And what we're trying to do here is we're trying to get either a breakdown or a breakup confirmation, and we aren't there yet. So Smart Money Concepts has actually been bearish and bullish and no confirmation of either, as it's in this ranging market. We also saw the parallel channel, the higher highs, the higher lows that broke on down. Great to see those liquidations, of course, and then obviously we broke right back up and we saw additional liquidations on there as well. So basically liquidate the longs, then straight away, once you've liquidated the longs, you're liquidating the shorts. And so you can see this very quick reaction here, basically moving down and moving back up, testing those highs. This is not the first time this has happened. This little area just here, we also saw it just over here. Okay, so again, you can see that we have this move. We basically liquidate the shorts, liquidate the longs, liquidate the shorts, then liquidate the longs, liquidate the shorts, liquidate the longs, liquidating the shorts, liquidating the longs, liquidating the shorts. And so it's just rinse, repeat, rinse, repeat, rinse, repeat, right? And so our structures are rather complex from an Elliott Wave theory point of view. There's now actually a couple of different ways that this can play based on this move to the upside. So there's actually a couple of different structures here that I'm having to keep an eye on. The one that we've currently got mapped out is the idea that we are in a 5-wave move to the downside, or we've got to have a 5-wave move to the downside where we have this 34,700 to 35,200 kind of level getting hit, right? Alternatively, we can also look at this as a bullish move to the upside, starting over here at 35,500, and this could be a wave 1, wave 2, and all of this is now starting a wave 3 up higher. That's a possibility as well. So there's a few different things that we have to kind of keep an eye on, but ultimately, in this ranging market, we just want to see confirmation of a breakout or a breakdown so that we can narrow down our options. We're not trading this particular structure on Bitcoin because it's high risk. What we want to do is we want to trade the confirmation. So we're either going to get up into our fifth wave high points and then short the market. Alternatively, what we're going to do is we're going to come down into the lows and we're going to go long on the market, right? What we're not going to do is we're not going to sit here and start gambling by going short here and long over here and just hoping that we're going to get a breakout or a breakdown. We're not going to run on the world of hope. We're going to run on the world of confirmation. So at the moment in the ranging market, 0 confirmations that can be seen here. We have obviously just the rinse repeat liquidity grabbing occurring. On the daily time frame, obviously we are confident on the moves to the upside. We do have our trend lines depicting our expanding diagonal. We are looking for that fifth wave to come up towards $40,000. And point of recording this video with $37,481. Ultimately, we've been testing the low side, testing the high side. We're just looking for that fifth wave move. Once complete, my expectation will be a good short. Obviously, if we take a look at the stochastics here, the daily is the only time frame that is oversold. Everything else is overbought, so that's going to potentially cause us problems if we do not see resets occurring on the other time frames. We can of course be in an oversold area here for a sustained period of time. We don't have to go to overbought. We don't have to rally up to $40,000. It's just the pattern that we find ourselves in and the area that I would expect us to do. The alternative here is that we have a diagonal that is irregular, and it would be looking like this. It would not be an expanding diagonal in that particular way of thinking. So again, it would not be right to think of that, but it is kind of something that we have to kind of keep an eye on. So all in all, we're either going to get confirmation of a breakout or a breakdown, and we're going to trade it accordingly. On the daily, we do have bullish structure. Smart Money Concepts is bullish with break of structure confirmations. We are above the 200 EMA, the 50 EMA, the 50 SMA. All of that is looking good, still looking good, hasn't changed in the last kind of few days or so. So nothing really major kind of sticking out here to kind of get me majorly concerned over Bitcoin. On the daily, it looks okay. We should be moving upwards, but again, I'm just waiting for confirmation on those smaller time frames. From a weekly standpoint, I just want to zoom out here for a little bit. We do have the higher highs and the higher lows across the entire history of Bitcoin here. Okay, as you can kind of see, I've drawn these white curved lines, basically connecting all the lows and all the peaks. And we haven't tested the low trend line in this bear market, not in the same way that we had seen previously. Now, I will note that in the previous cycles, we had the bear market low that did not touch the trend line. We rallied up, and then it was the secondary one that actually came down and tested it. Okay, this is the same as well. As we can see over here, the bear market low did not test the line, but we did test it over here afterwards. After that basic initial surge, we had a retracement. So if this is the case, then, you know, we can see a potential sustainable kind of move to the downside where we have a bear market low over here not touching the trend line and a retest maybe over here touching it. It's going to be interesting. Maybe it'll work, maybe it won't. I think ultimately everything that happened over in the previous two cycles were very much the same. They were very similar in the way that they were working. Okay, so it doesn't surprise me we get very similar kind of setups across those two cycles. However, in this bear market, we actually have some very different variables than what was over here or what was over here. Okay, so that is okay, but this one is different. And that is something that we have to acknowledge. We can't expect basically history to repeat itself. We can't expect ourselves to do something that happened over here or that happened over here because of different underlying variables. And I've explained this a couple of different times, so I'll try to do it again in this video for you. Essentially here we have a retracement that hits 1.236 on the fib scale, sorry. Okay, so that makes it a three-wave pattern, here, here, and here. Okay, perfect three-wave pattern. On the 2017, we stay above the 1.236, but lower than 1 on the fib scale. Again, perfect retracement in a three-wave fashion. Over here, though, we went down deeper than 1.236. We hit 1.382 on that Y wave. That essentially meant that we had to move up and move back down again in a WXYXZ pattern. That is fundamentally different than what we saw in the two previous cycles, which were just three-wave corrective patterns. So from an Elliott wave theory point of view, we have to acknowledge that we have different variables that are playing out across the current structures versus the two previous bullish markets. We also have other things that are vastly different. For the first time in Bitcoin's history, we'd gone down lower than the previous all-time high being up here at $20,000, and we obviously dropped down lower than it. That never happened previously, as you can see over here, right? We can see that we never went down lower. So again, other differences between our current bear market structures and the ones previously, right? Then, of course, we have the Gaussian channel, some glorified moving averages, essentially. But essentially what happened there was when we closed inside the Gaussian channel, we went down into the bear market lows, right? But instead, what we saw in 2022 was a close inside the Gaussian channel 1 week and then close above the Gaussian channel the week after, before eventually going back down into the bear market lows. Again, something that had never been depicted before in Bitcoin history. So is history going to repeat itself? Yes or no? No one really knows. I don't think personally history is repeating itself. I think we're rewriting Bitcoin history as we know it. There's not a huge amount of history here, and I think we're rewriting that. Now, when we take a look at everything that's going on here, okay, we have the retracements, the typical retracements back in 2017 was 2017 into 2018. We have 40%, 33%, 38%, 40%. Right in 2021, we saw, because I think simply because there was just so much money being printed, there was furlough checks, there were stimulus checks being sent out to people. We saw less retracements, 21%, 16%, 31%. And so, what's going to happen in the next bullish market, right? We kind of ignore that first initial surge. We have the retracement, which we're yet to see, which I do think is going to be a pretty significant one. This happens in all of the cycles so far, right? We can see there's this initial surge up, pull back, and then they're off to the races, right? The initial surge, a pull back, and then a continuation, right? In 2019, we start the bull market, we pull back into the lows, which for the most part didn't have to have the COVID crash. If we remove COVID from the equation, it was a 53% retracement. We could have rallied there, but with the pandemic took us down a little bit deeper, right? And so I'm thinking we're probably more than likely going to see a 40 to 50% reduction in price before we actually get that next big surge to the upside. And that kind of brings us on to where we are and what we've been talking about. We have the ascending wedge on the weekly. We can push up towards $40,000, but ultimately I'm looking at retracements of around 40 to 50% in line with a Fed pivot, which if you follow the Fed pivot, you know where they've happened historically. That's right. All of these moves in the stock market, in the crypto market, coincide with the crashes here, coincide with Fed pivots. So we need to be acknowledging that, Fed pivots do create these movements to the downside. You can go ahead and check all that if you want. And so we're waiting for a Fed pivot. This essentially is going to be where they reverse the rates, right? They've been increasing the rates. They're going to drop those rates. They're going to start to decrease the rates. And when they do that, we're expecting market to move down. Okay. And so what we're looking for here is going to be a 40 to 50% reduction in Bitcoin's price, which will potentially just get us into an accumulation zone before that next big surge. And that's the opportunity, right? This isn't a fear. It's not a FUD. This is an opportunity should that happen. Should that happen, that is going to be the last opportunity to buy, in my opinion. Ultimately, it's great to see some green in the market, but volume profiles do not make sense here. Overbought on the weekly and monthly. Volume profiles are really non-existent as we pushed up higher. So again, not really giving us that kind of bull market volume vibes, whereas we can see more kind of aligned to kind of bear market structures. Obviously, who has the most gain? Well, that's the market makers, the exchanges that were on the verge of bankruptcy or going bankrupt and need to liquidate their assets. Well, then those assets are now worth a significant amount more than they were. So I know who's making the money here, and it's not retail investors. Anyway, I'm going to wrap that video up right there. If you have found it useful, informative, maybe entertaining, smash that like button. I do appreciate that. If you're new to the channel, subscribe. And if you haven't yet joined us in Discord, why not check it out? Link is in the description down below. Until the next one though, guys, have a fantastic day.